Our approach in the Balanced Fund has always been to seek out alternate sources of returns, both to diversify risk and blend return signatures within asset classes. One of such examples is our use of the Sanlam Real Asset Fund within our foreign equity building block. So what are real assets, and what do real assets have to offer us? Real assets are core assets that form pillars of a functioning economy. The Real Asset Fund offers us exposure to a broad range of themes grouped into three areas: renewable energy, infrastructure, and specialized property, which align to many positive ESG factors. So through the fund, we invest in wind farms, solar arrays, hydropower, student accommodation, data centers, power, transportation assets, to name a few. These assets have long lifespans and can be considered to be listed alternative exposure. What first attracted us to these exposures was the long-term nature of the assets, in some cases over 50 years, and contractual revenue streams which have strong inflation linkages. In the current inflationary environment, this is a particularly attractive feature. Inflation revenue linkage leads to lower uncertainty regarding future earnings and, in turn, more stable return outcomes. That said, we do expect over the longer term that real asset returns would lag that of the broader market. So the use case for us currently is slightly more tactical and for the diversification benefits that it brings the portfolio. The benefits and features of the Real Asset Fund are best seen in this chart, showing the performance of real assets versus MSCI World since introduction across our portfolios. You see the less volatile nature of real assets versus the broader market, and the significantly lower drawdown profile due to the more predictable revenue stream, with the exception of the COVID crash, which is largely due to the risk asset contagion effect. The chart also shows real assets tend to lag, as expected, during periods of more robust market growth, but outperform during periods of uncertainty and during periods of greater inflationary pressure, as we are currently experiencing. Real assets have outperformed the broader market by over 13% year to date in dollar terms. But our approach in the Balanced Fund is to not look at assets in an isolated fashion. We don't only compare real assets to equity. We have also had a longer-term strategic bet in place to hold real assets instead of holding expensive foreign bonds, which have paid off very well. Current valuations indicate that real assets are priced to give you very good prospective returns at a dividend yield of 4.5%, with expected growth in that dividend yield of 5%. At these levels, real assets are priced to deliver returns in excess of what foreign equity has traditionally delivered and what is currently on offer from foreign bonds. And for that reason, we retain a healthy exposure to real assets in the fund. I trust this short video gives you a better understanding into the way we think about investing and how we search out alternative sources of returns in the portfolio.